Hey there, Winning at Life with Gregory Ricks starts in 5 minutes. Find Winning at Life basically everywhere. You can find us on Facebook, Twitter, YouTube, iHeartRadio, Spotify, Periscope, Twitch, Dailymotion, DLive, Smashcast, Stitcher, Apple Podcasts, Google Podcasts, CastBox, Castro, Podomatic, Overcast. Did I say Spotify? I think I said Spotify. Anyway, we're everywhere. We prefer you listen on the Winning at Life app, and you can use that app to find us on your preferred platform. Stand by, the show's starting soon. Winning at Life with Gregory Ricks starts in 4 minutes. If you're interested in learning more about money and the financial world, have you checked out the Ask Gregory podcast? The Ask Gregory podcast has financial topics covering everything from how to handle your 401k to Social Security rules to student loans to precious metals. It's all the best segments that we've done on Winning at Life, and we condense down into specific topics by episode. So if you want to know more about money and investing and retirement, that's a great place to start. Find the Ask Gregory podcast on the Winning at Life app, iHeartRadio, Spotify, podcast app on your phone, and about 1,000 other places. I mean, don't go do it right now because the show's about to start, so just sit tight. Winning at Life with Gregory Ricks starts in 3 minutes. Hey, I'm your co-host, James Parker. You can find contact info to some of our show partners, including the Total Wealth Authority, on the Winning at Life app. If you're looking for a financial advisor, start your search with Gregory Ricks and Associates. If you have a mortgage issue, try Dwayne Stein at Mortgage Gumbo. If you have tax issues, try Jude Heath, CPA. And if you have some estate planning questions, try Wes Blanchard. These are all members of the Total Wealth Authority. You hear them on the show on a regular basis, and they're all linked on the Winning at Life app. Winning at Life with Gregory Ricks is starting in 2 minutes. You can listen to previous shows on demand with the Winning at Life app, the iHeartRadio app, Spotify, whatever. It's just the Winning at Life podcast. Now, that's different than the Ask Gregory podcast. The Ask Gregory podcast is episodes sorted by topic. If you just want to hear recent shows on demand, like yesterday's show or the show from Saturday, that's the Winning at Life podcast. That's available everywhere as well. The Winning at Life app, iHeartRadio app, Spotify, Apple Podcasts, Google Podcasts, the whole drill. Hey, why aren't you already following Winning at Life on all of our social media?
Hey, y'all. You're listening to Winning at Life, live financial news talk radio. I'm your host, Gregory Ricks. Welcome to the show. We do this for you weeknights at 7. It's live financial talk radio. So if we could be of some help to you, or you'd like some help, let us know. 504. This is the number to call to join the show, especially for the newbies. I'm a financial advisor, money manager, founder and CEO of Gregory Ricks and Associates, the Total Wealth Authority. Been in the industry for better than 35 years, so know a little bit about what's going on there. And our goal here is to give you some help. So if you'd like to ask a question, bring us up a scenario, financial situation, you can join the conversation. 504-2600-9600. 995. That's 504-2600-995. One of the favorite topics on the show over the past 11 years that we've been doing this is Social Security. I think it's a really important decision that you have to make. It's a big decision. So one thought I want to give you a download that if you're looking for a little bit of help, we have a Social Security's decisions guide. Go to GregoryRicks.com/social security for a little bit of help on that. GregoryRicks.com/social security. You can download the Winning at Life app. You can text, email, call the show through the app, connect to our replay as well as our Ask Gregory podcast. We're over on Facebook Live, the Winning at Life page, and you can watch the show. James and I both are here. We're both waving to you. So attendees, welcome to the show. I kind of refer to this as the show of the Southeast, but we have viewers and listeners across the country. So once again, if you'd like to join the conversation, it's just a phone call away or email info@GregoryRicks.com. And the show's 504-2600-995.
2 days until your first pop-up event. For the guys hearing about it for the first time, what is this pop-up event
It's
all about?
It's a pop-up event. We popped it up. I decided last week, I said, I want to do some of these client-oriented events, and I think it's good for the public to understand what we do, because I think it's about strategies going forward. You know, we used to do that term review. We don't like it. Well, it's kind of review, but it's about what are you doing forward? Is it just going to be the same thing? And we're always working to get better. So there's 3 areas we're increasing. One is our portal, the GPS website, the Guided Planning System website portal, where you can access information about your accounts, where you can keep other data, digital vault, a lot of resources. We are upgrading that. And so we want to talk about that. Taxes are the theme going forward. One of the things we started doing earlier this year is do a tax analysis. So we want to talk more about that. I don't think everybody's taken advantage of that. And it's something we revisit every year with clients. And we're adding models for tax efficiency and generating tax-free returns as well. So I think that's really important, and we're wanting to share those models that we're adding to the investment strategies that we have. And number 3 is, I think everybody needs to have a tactical element to their investments, and we have that. And that's also means we have basically a plan for the Black Swan event. Like last March when the market tanked really bad. Well, we tweak the accounts. And when it's time for, or momentum shifts, the money's going to follow where the momentum is. What this does is give you a higher probability of success long term. That's what we're always striving for, is to make more, to keep more. So the 2 parts of that, yeah, you like great returns, but it's the market. It takes it back once in a while. Well, let's not let it take so much back. So we're doing 2 of those events on Thursday. 1:30 is one and 5:30 is the other. It'll be under an hour, so you're not going to be there a while. We'll serve some wine and sodas and so forth and some snacks.
All right, sign up for that event. Call Gregory at his office, 504-832-9200, or go to GregoryRicks.com. Jerry in Mandeville, you're on Winning at Life with Gregory Ricks. How can we help you, Jerry?
Hi, I have a question for regarding RMDs for the year of 21.
Okay.
And this is if the husband and wife are 75 years old and they file jointly. In 2021, the husband's RMD withdrawal should be $8,000, and he has withdrawn $12,000. The wife's RMD is $4,000, and she has withdrawn $0. Can the husband's $4,000 excess withdrawal be applied to the $0 withdrawal by the wife to avoid an underpayment penalty?
The answer is no, because that is a separate account. IRAs are not joint accounts, and his RMD, and even if he took a whole lot more from it, you still have to take the minimum distribution from your account.
Okay, that's what I needed to know.
Yes, ma'am. Sorry I couldn't give you better news on that, but you do want
Well,
the
I thank
truth
you anyway.
because it's expensive if you don't take what you're supposed to.
Right.
Well,
Yes.
thanks for trusting us,
Okay.
Jerry.
Thank you very much.
Have a great evening.
All right, that's almost a record on this show. That was a minute and 30 seconds from when we said hello to when she hung up. So that was with the hellos and with the thanks for callings, and you solved that in about a minute.
Yeah, I appreciate a softball occasionally, but that was easy. And they're separate accounts considered separate accounts. And it's a male and female, but it's two different humans owning those accounts. It's not joint. So the rules are separate for each.
Now, if one person has a bunch of accounts, then it's an aggregate.
It is an aggregate of all of the accounts, but in that case, you know, they could have IRAs, 401k, multiple IRAs, different firms. They could have some IRA annuities, but when they total that together, it's an aggregate of all the accounts. Now, it doesn't matter which account they take it from, just so long as they take it. And that'd be the same for the spouse. Aggregate of all the accounts, doesn't matter which account it comes out of, so long as it comes out of the IRA overall.
Well, I like the way Jerry's thinking. Maybe they can not withdraw more than they have to out of her accounts, but okay.
You know, and that's sometimes where we look at what's the strategy of those distributions. You know, where is best suited to take it from, and that's where you would look at. It's not just, oh, let's pick this account. Well, we want to look at what that strategy is, the performance of accounts. One simple way to do that, what's the lowest yielding of the accounts, is something to think about also. Or it might be this account doesn't have much left in it. Let's go ahead and take it from that account. Could be as simple as that also.
Well, it's always good to ask, because what percentage of people getting up in that age know that they changed the rules on required minimum distributions just a couple of years ago? You know, it's always, you never know if you're not caught up on the rules.
Yeah, but those that are already taking it didn't have any change for them. It's just those that were due to start were deferred to age 72. Now, what's coming in the near future is the tables are going to be adjusted slightly to reduce the impact. So something you and I were talking about a couple weeks ago regarding RMDs, such as somebody 101. You know, those, when you get over 100, those RMDs are a big portion of the account.
Right.
So the tweak is probably going to give it a little more time. Not much, but a little bit more.
And if the rules do change, just keep listening to the show. Gregory will tell you about it. Or that's something you might have to cover in a pop-up event going on in the future, another big legislative change to people's accounts. That might register a pop-up event coming up. And if you're wondering why we're talking about that, he's got 2 coming up on Thursday.
Yeah, call the office regarding the pop-up events if you have any questions. We've sent a couple emails out to clients, so we're going to have some people there. Be interesting. And this kind of test event, see how this goes before we do the major rollout.
And you get to meet Gregory Ricks?
Yes.
You're going to be at both of them?
And I will be speaking at both of them, not doing the whole presentation, but part of it, which I think is fair.
It's pretty cool. Nice little social event, it sounds.
Yeah, looking forward to seeing our friends.
All right. We're going to be talking about inflation coming up, but I just like the turn of phrase you did on a show maybe about a month ago where you were just throwing some general warnings out there. Inflation is coming to an account near you. Now, you said that just at the end of the summer. Federal Reserve Chairman Jerome Powell is speaking to Congress in a couple days, and he gave basically a transcript of his remarks that he's going to say. So we know 2 days in advance what he's going to say, so this is all theater. But he's going to basically admit that this transitory inflation that they've been promising is just transitory. It's not really going to be that transitory after all.
And if you're listening to Winning at Life Radio, you've been hearing us say that for a while, that this is not going to be transitory, or it's going to impact in both. It's not going to be transitory, and it's going to impact for a longer period of time. You could have the inflation dial back some, but part of that is how far behind inventories are and how long it's going to take to catch up. And I think they thought everything would catch up pretty quick, and that's a major part of the problem. Is catching up is going to be a while.
If you got a financial situation and you're not quite sure what to do, maybe it's your turn. Grab your phone, call Gregory, 504-260-0995. I'm James Parker. We are Winning at Life with Gregory Ricks.
Take back control of your retirement. I'm Gregory Ricks. Join me at Keith Young's Steakhouse for a wine, wisdom, and food experience. Wednesday, October 13th at 6:30. We'll have great food, wine, and talk about strategies to help you win at retirement. GregoryRicks.com to reserve your seat or call the office. 985-200-3110. 985-200-3110.
Investment advisory services offered through AE Wealth Management, LLC.
Gumbo Nation, this is Dwayne Stein. My team and I make dreams come true daily. Buying a home could seem stressful if working with the wrong lender. Mortgage Gumbo removes that with our exclusive pre-approval process called Fast Track. Don't let other lender horror stories scare you, like last-minute turndowns leaving you homeless. Get your exact buying power so you can shop with confidence. When buying a home, you don't want a lender right most of the time. With Fast Track, we get it right all the time. Visit snapsendandsave.com.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can hear the Ask Gregory podcast, where you'll find episodes based on a financial topic. So if you're looking for help on a specific situation, there's a good chance you'll find it on the Ask Gregory podcast, including episodes on 401ks, taxes, stocks, Social Security, gold, and whether or not you should buy an RV. Hear the Ask Gregory podcast on the Winning at Life app, your wallet's favorite app.
Half of estate planning is having a plan put together for your loved ones when you pass away. The other half of estate planning is dealing with someone else's plan when they pass away. Sometimes they have a great plan, but sometimes you need a little help. Don't leave your loved ones in a bind. Call me, and we'll make sure you have a plan. Hi, I'm Wes Blanchard, an estate planning attorney in Metairie. What's your plan? Find me at wjblanchardraw.com.
The Ricks Report with Gregory Ricks.
What we found through history, looking at the past 90 years, most fund managers don't outperform or perform as well as the indexes. Using indexing, historicals teach us skew a higher return. And yes, there's bad stocks in the S&P 500 as it looks right now, and yet the index is up. I like to use indexed ETFs because those are much lower expense ratios. We try our best in managing our portfolios to avoid trading costs, and we know I've been doing this for 30 years. I've studied trading strategies. You're not going to outsmart the indexes. You may get lucky, you may get unlucky.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
Yeah, knock, knock, hear you coming, knocking on my door, but you're gonna have to wait on the porch. Better hide the wine.
Hey, y'all. we're back, just like inflation. Inflation's back. Here to stick around with us for a while. Macro alert here, something I share with you guys every month. I'm your host, Gregory Ricks, by the way. James Parker's here. The number to join the conversation. Who called us earlier?
That was Jerry in Mandeville.
Jerry called us to talk about required minimum distributions. You can do as she did by dialing 504-2600-995. And in the macro alert, and this was probably ahead of the Fed meeting, but basically in the macro alert by Scott Minerd, one of the Guggenheim partners and chief investment officer. In his piece I shared with you recently, and I know this kind of looks like past news, but this is relevant for our inflation talk. Federal Reserve has been trying to clear the runway for tapering announcement, but recent economic data thrown a wrench into the plan. I would have said monkey wrench into the plan. August payroll gains came in nearly 500,000 less than expected amid the Delta-driven COVID surge. September payrolls could also disappoint given that restaurant activity, the primary driver of recent growth, has shown continued weakness in August. The Delta effects also evident in August CPI data. The categories we've highlighted as transitory were again the main story, but this time to the downside. Travel sectors saw large price declines amid Delta surge, with airline, hotels, car rentals prices declining. Used car prices also fell. One of the things that we've been seeing lately also, but this is an impact across everything. Let me get this pulled up here to give you an accurate number. But now my computer wants to go slow. Here we go. Another click through. But I think this is something that's not going to help the administration or the Federal Reserve, and that's crude oil prices. Crude oil futures last shown. Let me just click an update, make sure I'm right here. As it resets. Okay, $74.55. Brent crude, $77.68. And you know what the expectation is? Crude to continue up. Nothing gets where it needs to be without some fossil fuel helping it along. Yeah, there's some Teslas out there, but not enough to make a difference there. So you're going to see that impact everything. A little bit further, because we haven't talked about these numbers lately, but when you're looking at that, we go back to, let me just pull up a 1-year chart. We go to 1 year ago, we're at $38.72. We go back to January, we're at $48.52. Well, we're probably going to see $79 here soon. I know it's meandering, but it's meandering upward there. So I think this is a tremendous impact. This is better than 35% increase this past year. It's significant. That number percentage is probably low. On that case, it's probably over 40%, but I think it's something to keep in mind when we're talking about inflation there. And I think we'll probably see tapering conversation more likely to be more focused in November's early November Fed meeting there in regarding to that. Yeah, Fed chairman's going to talk about that, and he can't completely come out and say, yeah, it's short term, it's not that much, and it's transitory. Well, it's not ceasing. Where some things have dialed back because of conditions, but like car prices are up significantly, And why is that? Shortages caused by what? COVID. And these things are not correcting themselves in short term. Some stuff I've ordered furniture-wise is 6 months out. Nobody's called up and said, yeah, we made an error. It'll be there in 2 weeks. Nobody's catching up on that stuff.
All right, if you got a question on this, 504-260-0995, or give us a call or text from the front screen of the Winning at Life app. Now, some of this is to be expected because I do have audio of Jerome Powell over the last few meetings telling us he's going to let inflation go far above the target. He's going to let it run hot, probably longer than you expect. And so I think for some people, they find a little bit of solace in the, well, he did say he was just going to sit back and do nothing while inflation runs hot. So it's kind of self-fulfilling prophecy situation here. It's not pretty, but he did say he was going to let it run.
Well, that's some of the concerns that we've seen on the markets today as well from a number standpoint. Let's see. We were off on the Dow. Yeah, 569 points, 1.6% change there. So you're looking at NASDAQ was off 2.8, the S&P 500 2.04. And you've got a couple things going on. Inflation's a little bit of a concern. And the other is what's going on in Washington, D.C., debt ceiling. They're just not. And then you had a prominent banker out there in the country kind of say, yeah, this would be really bad if we have a default. But they say that every time, by the way.
Mm-hmm. Hadn't defaulted yet.
Yeah. So once again, it comes up and they'll get their heads together and get this going forward.
Well, you got a little stack of comment cards in front of you from previous events. And one of the common questions, one of the concerns people have, because it's not like a comment card, it says, what questions, concerns do you have? People are concerned about inflation. That shows up all the time in the comment cards. What's sort of the general approach you have to those people who already have a bunch of money invested, getting close to retirement, and worried about inflation?
Well, see, inflation eats away at the buying power of your money. So one of the key things is you have your money working. Now, some points you're not going to be able to keep up with it, because of being, say, conservative. You may not keep up with, say, 6% inflation this year. And then once again, what is inflation going to be next year? That's an unknown, because if it does show up to be somewhat transitory and dial back, it might not be off the scale next year. But I would expect the next few years, inflation's going to be more than what we experienced as the average the past 10 years. So how do you work to keep up? You've got to have your money working. You've got to have the right blend of assets out there. The CD world is not getting it done that way. It doesn't mean you have to take much or a lot of risk. It might take a little bit, but you've got to work to get a better balance of return to kind of keep pace. And one of the things on my blog, the news blog, we talked about the article up there from Motley Fool that we shared with you regarding Social Security there. In April, the National Pollster Gallup asked a group of non-retirees what extent they expect to rely on Social Security income when they hang up their working gloves. All-time record, 38% expect it to be a major source, with 85% of respondents expected to lean on the program in some capacity to make ends meet. So with the program playing a clear role in the financial well-being of our country's elderly and disabled, there's no announcement that's more important than the annual cost of living adjustment that we're just going to see here in just a couple weeks. But since 1975, Social Security's COLA has been tethered to the Consumer Price Index for urban wage earners, clerical workers, or CPIW.
Just a silly acronym, CPIW.
Yeah. And we're so thankful for those. This index tracks predetermined baskets of goods and services. It has 8 major spending categories with dozens upon dozens of subcategories. Each category has its own relative weighting. It sounds like a market index here. Ultimately, the CPIW can be boiled down to a neat and tidy single number that can be compared to previous year's reading to determine if prices are rising. In the case of Social Security, only with the CPIW readings from the third quarter through September are used to determine the following year's COLA, while the other 9 months can help identify trends. They have no bearing on the announced COLA. If the average CPIW reading from third quarter in current year is higher than the average from the CPIW reading from third quarter previous year, beneficiaries will receive a raise commensurate with a percentage increase rounded to the nearest 0.1%. For 2022, nearly all current Social Security beneficiaries looking at their largest increase benefit in history. Based on the CPIW data for July and August, the Senior Citizens League, a nonpartisan group for seniors, predicts the COLA upcoming this year likely to come in at 6%. We'll give you some more numbers on that, what that actually looks like when we come back from the break.
All right, questions for Gregory. Grab your phone, 504-260-0995. I'm James Parker. We're Winning at Life with Gregory Ricks.
Take back control of your retirement. I'm Gregory Ricks. Join me at Keith Young's Steakhouse for wine, wisdom, and food experience. Wednesday, October 13th at 6:30. We'll have great food, great wine, and talk about strategies to help you have a confident and comfortable retirement. Reserve your seat today for wine, wisdom, and food experience at GregoryRicks.com or call us at 985-200-3110. That's right, 985-200-3110. Reserve your seat today. Go to GregoryRicks.com or call us at 985-200-3110. 985-200-3110.
Investing involves risk, including potential loss of principal. Investment advisory services offered through AE Wealth Management, LLC.
2 questions. Do you have a pulse? Do you own anything? If you said yes to both, you probably need a will. You may even need a trust. We all know a lawyer. Do you know someone who specializes in estate planning? Do you really trust the husband of your sister's friend from college? Or would you feel better putting your family in the hands of the estate planning attorney of the Total Wealth Authority? I'm Wes Blanchard. What's your plan? Offices in Metairie and at wjblanchardlaw.com.
Most people think of Crime Stoppers as only a tip reporting line, but we're so much more. Crime Stoppers G&O has worked in our area schools, offering prevention presentations on trending topics from drugs, bullying, online safety, suicide prevention, and much more. And we have a high school teen leadership program which provides students with a first-hand look at the criminal justice profession as a future career, while learning to be an advocate for their fellow students. So to learn more, visit safeschoolsla.com or call 504-837-8477.
If you like money, you'll love the Winning at Life app. On the Winning at Life app, you can listen to the show live 6 days a week. And if we're not on at the moment, you can hear a replay of the latest episode of Winning at Life. Whether you're getting a late start on your retirement savings or keeping up with the financial news, Winning at Life with Gregory Ricks is there on demand. Hear the Winning at Life show on the Winning at Life app, your wallet's favorite app.
I'm Rich Dennison. General Kenneth McKenzie, head of U.S. Central Command, telling lawmakers today he would have liked to maintain a small military presence in Afghanistan.
I recommended that we maintain 2,500 troops in Afghanistan.
Military leaders today telling a Senate panel investigating the U.S. withdrawal from Afghanistan that the rapid fall of the Afghan government to the Taliban was a surprise. White House Coronavirus Response Coordinator Jeff Zients says the vaccine booster program is off to a strong start, with about 400,000 doses administered just over the weekend.
And we will continue working with our partners to execute so we can efficiently and equitably provide the added protection of booster shots to eligible Americans.
The Biden administration says there's still a large number of Americans who have not received their first dose. America's listening to Fox News.
Winning at Life with Gregory Ricks is a copyright of Down South Strategies for the private use of our audience. Any unauthorized use of this broadcast without express consent is prohibited. For podcasts, show information, and contacts to our sponsors, go to winningatlife.com or download the Winning at Life app. If you've got a financial situation and you're not quite sure what to do, you better call Gregory. We are Winning at Life with Gregory Ricks.
Hey, y'all. Winning at Life. Hey, tune into our show Saturdays from 10 to 1. 3 hours of live financial news talk radio. So remember the Saturday show and tune in on weeknights at 7. We're here as well to share ideas, tips, and updates with you. And we're talking about Social Security's increase.
I'm so sorry to interrupt. I just have it in my notes. We hadn't talked about the wine, wisdom, and food events that are coming up for October. You got the
okay.
The one that's October 13th in Madisonville. That's a Wednesday. Wine, wisdom, and food experience at Keith Young Steakhouse at 6:30 p.m. That's hosted by Gregory Ricks, the financial celebrity across the table from me. He's just going to give you a nice little rundown of what he does more at his day job. And if you're interested in hearing more about what they do, the guided planning system, their little playbook, you can go to that one in Madisonville. And the first one's in Baton Rouge. I know we've said it before, but it got canceled because of the stupid hurricane. They got rescheduled for Sullivan's Steakhouse, October 26th. That's a Tuesday. And October 28th, a Thursday in Baton Rouge. So Sullivan's Steakhouse, 6:30 p.m. Same thing there, same presentation, same awesome host, Gregory Ricks, telling you more about what he does at his day job. Give you a chance to kick the tires, fill out a comment card, and just see if you want to go forward and maybe do business with him outside of listening to his awesome radio show.
Thank you for that.
Yeah, sign up at GregoryRicks.com or 504-832-9200. And I just want to get that in there because you're about to take all the wind out of everyone's sails. You just told them how they're about to have the biggest cost of living bonus in their lifetimes for Social Security, but it's really, in net terms, not going to matter that much.
Yeah, last time's, well, let me go back here on the article from Motley Fool. That basically said benefits could well rise. This is from the Senior Citizens League, said the upcoming year we're likely to see a 6% increase coming in January this coming year. The average retired worker who expects to be receiving $1,568 a month by December, a 6% COLA would translate to a $94 monthly bump in payout. The last time Social Security recipients saw a COLA of 6% or higher was all the way back in 1983, when COLA passed along for that year was 7.4%. So unless you were netting a payout from Social Security 39 years ago, this would be the biggest raise ever for 65 million plus recipients. The grim reality is that most of the program's recipients aren't going to see that much or any of this increase, as higher prices for a variety of goods and services eat up that payout boost. For example, Congressional Research Service estimates Medicare Part B monthly premiums will rise from $148.50 in 2021 to $157.70 per month next year. This equates to a 6.2% increase, which is even higher than the predicted COLA. Between 2000 and 2020, the average annual Medicare Part B premium hike has been 5.9% compared with an average Social Security COLA of 2.2% over the same time. you know what? That ain't even fair,
It's
is
a
it?
raw deal, I
You
think,
know,
yeah.
and that's kind of what I've always said when I factor in Social Security benefits when we're doing income planning. I really don't factor in hikes because it's essentially the same spendable dollars. You could show the increases and all of a sudden look, oh, we're getting much more income, but you're not really, because it's always basically taken by the Medicare premium. So where I will show increase of income from assets, I never really build in the Social Security because it's not like oh, cool, in 5 more years we have some money for a trip based on the monthly increases.
Right.
So I personally don't like seeing it that way, and I think it gives you a false impression of what you're netting there. For example, so according to Bureau of Labor Statistics inflation data from August, a number of other key categories of consumer price index for all urban consumers show signs of higher inflation. The CPIU is a similar financial measure to the CPIW. In August, the CPIU showed shelter inflation up 2.8% over trailing 12 months, food inflation up 3.7%, and 5.2%. We're trying to shift to a world where we're dependent upon electricity solely, and it's up 5.2%. And used car inflation may not be affecting Social Security's retired workers, but they all need a roof over their heads, food on their tables, and electricity to make things go. I think it's enough bad news right there from that standpoint.
Yeah, and that's what happens most of these years is you're going to get a little bit of a bump, and then some of it's going to be eaten up by the increase in your Medicare premium. Some of it's going to get eaten up by inflation at the store.
Let me hold on. Just wait a second. Let's talk some more. And this actually supporting my theory on why not to factor. Well, why don't you factor in increases in Social Security? It averages, a couple percent a year. Well, here's why. According to a report from TSCL, the purchasing power of Social Security income has declined by, get this, 30% since 2000. In other words, what $100 in Social Security benefits could buy in 2000 can now only purchase about $70 worth of goods and services. So almost going this way on income planning, maybe we ought to be reducing the Social Security benefit a couple percent each year because the buying power is going away. So I saw that and I said, well, heck, that kind of supports how I think about that.
And we read this and we think, well, they're really undercounting the inflation. They should probably throw in a higher number there. They used to have a higher number that they used for inflation, and then they swapped it out in the 80s, and they swapped that one out.
That was costing too much money, so they got to go with something that gives lower.
And then they did. They just swapped it out again in like 10 years ago to this even lower measure of inflation. They're kind of doing this on purpose. They're sort of inflating their way out of what looks to be a bad timetable as far as Social Security goes.
We got a few minutes here till the break. Let me hit some points with you. Want to stick to Social Security?
Sure.
Cool. Okay, bad excuses to turn on Social Security early. How about this to start with? Your benefit will be permanently reduced. It's a big, obvious reason you wouldn't want to turn on Social Security early, but that's just scratching the surface. It's about 8% a year to defer. Well, technically, before your FRA, it's neighborhood of a little more than 6% roll, 6.75% roll up. After FRA, it's a simple interest increase of about 8%. And once again, cost of living adjustments aren't going to really be big. So if you're turning it on, you're really locking in that lower rate if you can defer. If you're totally dependent upon it and what's going on to make things work, I get that. But if you can defer to your FRA, you're going to be in better shape longer. Also, the other talk about early Social Security income clawback. So it's hard to justify turning on Social Security early if you're still going to be working and bringing in significant income. For this year, For every $2 above the threshold, which is $18,960, for every $2 over that, they're going to take back $1. So if you think you're going back to work and you've got a year to undo it and reverse the turnover decision, but that's expensive error, making too much money. And number 3, I want to start getting checks because Social Security is going away. I think that's a horrible way to look at it. I know they're underfunded, but gosh, we can toss around a few $1 trillion here and there. They're not going to let Social Security benefits get dialed back. It definitely is not going away. Most of the revenues are dependent upon payroll taxes. And I don't think they've raised it on either side in somewhere over 30 years now. So that is coming. And we're in a climate where this administration isn't bashful about saying, yeah, we're raising taxes. He won office based upon campaigning. Yeah, we're going to raise taxes. So I don't know that would hurt them roll back. So that was a couple thoughts about those were 3 bad excuses to turn it on early.
All right, if you got a comment or question for Gregory, 504-260-0995, or you can give us a call or text from the front screen of the Winning at Life app. If you're interested in some of those events we talked about earlier, the Wine, Wisdom, and Food Experience reservations can be had on the website at gregoryricks.com, or you can call the office. If you want to go to the pop-up event, call the office as well. 504-832-9200. I'm James Parker. We are Winning at Life with Gregory Ricks. If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
Wealth is built by being successful and peeling money off. And when that jam of yours stops working, you've got a lot of money elsewhere.
Gregory Ricks and Associates, 504-832-9200 or gregoryricks.com. Investing involves risk, including the potential loss of principal. Investment advisory services offered through AE Wealth Management, LLC.
Mom, it stinks.
Hush, I'm almost done. All right, now you're safe from bugs in the backyard. Don't let mosquitoes ruin your outdoor fun. Call Mosquito Joe today. When you call, they come out and they do the spraying. Mosquito Joe's time-release capsule lasts for about a month. No more sticky bug sprays. Take back your backyard. NewOrleans.mosquitojoe.com. NewOrleans.mosquitojoe.com.
If you've got a financial situation and you're not quite sure what to do, you better call Gregory.
The single biggest financial regret of Americans surveyed by Bankrate was waiting too long to start saving for retirement. Respondents 50 and older expressed this regret at a much higher rate than younger respondents. Morningstar calculated how much you need to sock away monthly to reach the magic number of $1 million saved by 65. Assuming a 7% annual return, you'd need to save $381 a month if you start at age 25 and almost $5,800 a month starting at 55. You see, that just really becomes an obstacle when you delay.
Gregory Ricks and Associates. Find us at gregoryricks.com or call 504-832-9200. Investment advisory services offered through AE Wealth Management, LLC. The Ricks Report with Gregory Ricks.
So part of our invest 50-50 money management philosophy is to use stock ETFs. We like the indices. We're not going to beat them, so let's join them. Somebody will say, well, what's your track record? Well, what's the track record of the S&P 500? Because that's what we're using, the Dow, the NASDAQ, and some of the sub-indices there. Well, what are you doing on bonds? Well, we like those on the ETFs because I'm not in the buying houses and selling houses business. You know what the pain it is to sell a house? Well, that's kind of like selling a bond. You got to list it and wait for bids. I'd rather do it inside of an ETF that has low expense ratio and let the institutional guys help with that selection.
Winning at Life with Gregory Ricks. Find us on the Winning at Life app or winningatlife.com. Investment advisory services offered through AE Wealth Management, LLC. Investing involves risk, including the potential loss of principal.
'Cause you make me wanna pull this truck to the side of the road, slide on over, let me hold you close and tell you everything I'm thinking. Hop on out and let
Hey, y'all. We'll be with you tomorrow night at 7. We're going to talk about Social Security, 401ks. James and I on the break was kind of talking about some self-dealing in the Fed, it turns out. And maybe we'll talk about IRAs, some of the rules that you have to be aware of, especially on self-dealing, where your IRA buys a bunch of property and then your IRA sells some of it to you. Yeah, that's not right.
For an incredible price.
Yeah, and we'll cover maybe a few more thoughts on why you shouldn't turn on Social Security early as well. I will talk about some tax stuff as well. That's kind of the theme out there. I've got a couple events coming up. What are my events next month?
The Wine, Wisdom, and Food events, there's one October 13th in Madisonville, and then there's two of them in Baton Rouge, October 26th and October 28th.
And we're doing client pop-up events to talk about the upgraded portal that we have for clients, the new tax models for investing we've added, and the tactical strategies to protect you from that black swan event, or when momentum is shifting to other areas, that money's going to shift. And I think what it's important to do is have proper asset classes that you're investing in. First off, I do like me some stocks, and I like that through exchange traded funds. I like me some bonds through exchange traded funds. And depending on the situation, may be taxable or tax-free income from the bonds. We also like tactical, because I don't want all of my accounts to go down 38% when COVID hit. I don't think. Now, you can't time the market, but you can do there's shift points, and then to move towards momentum there. Remember, if you're trying to time, first off, you got to figure out when to get out, and then what's the hardest part is when to get back in. Become more tactical in your thinking. Now, and the fourth asset class I think you should utilize is index linked. I like me some fixed indexed annuities with par rates so I can get the upside of the market without downside exposure. Call my office if you want to know more about all this stuff. 504-832-9200.
To the phones we go. Kenneth in Ocean Springs. You're next up on Winning at Life with Gregory Ricks. How can we help you, Kenneth?
How you doing?
Hey, doing great. You?
Yes, I'm doing fine.
How's Ocean Springs? Pretty day over there today?
Oh, it was. Well, it's a little bit cloudy, but,
okay.
It was nice. It was nice. I'll take it.
Okay, awesome.
I have to start off by saying I am a client with your firm, okay? So I want that to be known. But my question had to do with I'm concerned with inflation. And I heard Glenn Beck a couple of days ago talking about the inflation was stated at 4.2% currently, and that if you went to the 90s inflation, because it was adjusted, it would be 8%. And then if you went back to the 70s inflation, the way they figured it, it would be at 11+%. And so my concern is, are we entering the Carter years again? And what do you say about inflation, and how can that affect your holdings and investments?
Well, here's the problem. Cash is a problem because it's devaluing as you go. You want hard assets. Stocks are something that you can utilize that will make you money long term as a result of inflation. Bonds are our problem is rising interest rates, which can pull them down. And once again, we're not making investments for just today, this week, or this month. We're making investments for the longer haul. But we do have to tweak and make adjustments for what's going on now. And that's, I'll tell you, Kenneth, my team and I, we spent a great deal of time this morning on this subject and how to adjust our philosophy going forward. It's not an abandonment or major change, but it is a tweak to that. Because what we want to do is probably be more conservative on bonds, be more shorter term. We still like equities as a portion. We really like fixed index where there's no downside exposure. But that's why we're probably making it a tactical adjustment to the portfolio to where if things kind of go negative, we will adjust to protect downside exposure. But we're also wanting to take a portion of the money and make sure it's moving to where momentum is. And once again, this is kind of shorter term adjustments to be in position for the longer term. You can't just, you tell me, where are you going to go? You're going to go to cash? Cash is not going to get you there. So it's making adjustments. Don't panic over this. Carter. You brought Carter up. How many years was he president? 4. And repairs were done when he left office as well. So don't go making bad decisions because you're not necessarily on board with what's happening. And I'm with you there. I have concerns, but that's why I'm in this business, to help you and others through this and stay the course, make good decisions, and not be overexposed where you could be injured financially. Does that help you at all, Kenneth?
Well, it does, but I have one other question.
Okay.
As an investor with your firm, would you, because I kind of want this actually, because you're the one that's in touch with all this stuff, would you kind of make those decisions for us and kind of protect the people that are your clients, and make a kind of a sweeping move at a moment's notice if you needed to? You know what I'm saying?
Yeah, I would say we have made those adjustments in the past. And and I think what we're working on today is to be where we can make those adjustments, because this is when we go back to, and we made those adjustments for early in the pandemic as well, and we've done it other periods of time, but what we're going into is also something different than the pandemic as well.
Yeah.
And that's kind of, once again, we spent a great deal of time on that subject this morning at the firm, and we did last week, and I spent time on it the previous week. So this is something that has our attention. It really does.
Okay. I got it.
And once again,
I appreciate that.
Yeah, if you need more discussion, you can call the office at my day job as well. But I appreciate you calling, actually, and bringing this up on the show so others can hear, because others have the same. We hear this a lot, Kenneth. A lot of people have these concerns just like you do. Thanks for calling in.
Right.
Thank you, Kenneth.
Thank you.
All right, see, there's someone with a concern over inflation right there, Gregory.
Well, that's why you have to be growing money. If you I just like letting it sit there, and it's going to eat away. It's being eaten away no matter what we do. And this is not the hyperinflation that we're going to see somewhere down the road. And the thinking is, because of all the debt, and it is accelerating faster than what I told you several years ago it was going to get to it at 5, 10, 30-year, and 50-year marks. And it's accelerating so much faster. But, I also wonder, in my advice, the country's not going to default, but at some point we hyperinflate to make the numbers work. But it's almost like they don't care. It's kind of like we always thought interest rates would go up, but interest rates never go up. So am I wrong? And debt, ridiculous debt, spending money like you stole it from somebody else, and it's okay for the government to do that? I know we don't have time to debate it, but it kind of makes you second guess. Well, maybe we don't have to hyperinflate. Maybe interest rates don't need to ever go up.
Yeah,
it's just a thought.
I think the time scale still exists. It's just been extended because we've gotten really, really good at kicking the can. There's a skill of kicking cans in modern America.
It's like dead cap space in football.
Yeah, can you still make a deal?
Because if
with
the Saints have a winning season, they've like figured out a way to beat it.
If there's a kicking cans in the Olympics, the USA would get at least silver. All right, if you have a question for Gregory, I advise you to call him at his office at this point because the show's about over. Go to GregoryRicks.com or 504-832-9200. Hey, thanks for hanging out with us tonight. I'm James Parker. We're Winning at Life with Gregory Ricks.
Investment advisory services offered through AE Wealth Management, LLC. Winning at Life with Gregory Ricks is for informational purposes only and does not recommend the sale or purchase of any specific securities, investments, legal advice, or tax advice. Investing involves risk, including potential loss of principal. Roth conversion is a taxable event and may have several tax-related consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA. The information and opinions contained herein are provided by third parties and have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed. Neither AE Wealth Management nor advisors providing investment advisory services through AE Wealth Management recommend or facilitate the buying or selling of cryptocurrencies. The firm is not affiliated with the U.S. government or any governmental agency. The firm offers insurance services. We are Winning at Life with Gregory Ricks.
WRNO FM, New Orleans, an iHeart radio station. Available everywhere on our free iHeart radio app. #1 for music, radio, and podcasts, all in one.